The crypto crackdown just got worse, although there is something very awkward that was just revealed about this crackdown, so you gotta hear this. Also, big Avalanche news and the latest happening with Bitcoin, including some very bullish predictions. First, let's talk about the war on crypto. The SEC seems to be committed to destroying domestic innovation in the cryptocurrency industry in the USA. They are going after exchanges, they're going after brokers, they're going after service providers and banks and individual companies and basically anyone who has anything at all to do with crypto in the USA. Now, the newest front could actually be against the decentralized exchanges. You see, a new proposal could actually see the definition of exchange expanded out to allow the SEC to claim even more jurisdiction over decentralized exchanges. Now, this is coming in the same week that the SEC is actually suing Bittrex. Now, if you don't know what Bittrex is, they were once like the big exchange. They were a very popular US-based exchange back in the day. Basically, the SEC is arguing that Bittrex is selling unlicensed securities such as Algorand, Dash, a few other tokens that they specifically called out, which makes this video here of SEC Chair Gary Gensler shilling Algorand just 2 years ago very awkward.
You could create Uber or Lyft on top of a blockchain technology today. Well, maybe in 5 years you could. It would have the performance. Sylvia McCally's Algorand, who's a Turing Award winner at MIT that I work with. Sylvia's got a great technology that has the performance. You could create Uber on top of it.
Oh, the hypocrisy. The SEC has been a total failure. They didn't protect against actual fraud companies like FTX. In fact, they cozied up to them, working with them to cut backroom deals. Instead, they go after companies like Coinbase and Kraken, companies that are trying so hard to play by the rules. But to quote SEC Commissioner Hester Pierce, who has been a dissenting voice on the SEC's approach to crypto, she said, "Today's commission tells entrepreneurs trying to do new things in our markets to come in and register. When entrepreneurs find they cannot register, the commission dismisses the possibility of actually making practical adjustments to our registration framework in order to help entrepreneurs to register, and instead rewards their good faith with an enforcement action, also known as suing them." Crazy stuff, right? Meanwhile, Coinbase CEO Brian Armstrong just met with the UK finance minister. It's pretty clear here that there are plenty of countries that are very much ready to welcome the cryptocurrency industry to their shores, whether it be the UK or Dubai or Hong Kong or Singapore or dozens of others. The crypto industry in the USA stands out to lose big time. Now, the tweet said the UK is moving fast on sensible crypto regulation to both drive economic growth and consumer protection. Excited to keep investing in the UK. In fact, that was followed up later with Coinbase saying that they might even leave the USA if there is no clear regulation given. Remember, they're currently being sued by the SEC because they would refuse to give them clear regulations. It would be such a big L for the USA if Coinbase leaves. It's even hard to comprehend. Totally different, of course, what we're seeing in the UK from the land of freedom, where financial regulators refuse to even just tell anyone what the rules are. People ask, what are the rules? I'm not going to tell you. What coins are securities? And we're not going to tell you that either. Can we register? No, you can't register. There's not actually a process for you to register, but you should register, but you can't. Instead, they just sue everyone. It's insanity. If you think the SEC is absolutely screwed up on their approach to crypto, then just write, they screwed up bad down in the comments, because they have. But let us all know anyway your dissatisfaction with this terrible regulatory organization. Now let's talk about the Avalanche news. So Avalanche is picking up steam with a surge in daily active wallets. Avalanche's daily active addresses actually has hit a 6-month high of almost 80,000 on April 12th. Daily active users right across the ecosystem have also grown by 85% in the past 9 days, which is definitely an impressive growth metric. This makes Avalanche one of the fastest growing protocols right now, outpacing the likes of the BNB chain, Tron, Ethereum, Aptos, and even, of course, Bitcoin. There were only 4 protocols that grew at a faster pace this year, and those were Starknet, Arbitrum, Stacks, and Canto. The reason for the sudden surge of interest and, of course, of users into Avalanche came off the back of some really big and exciting institutional news for Avalanche. Avalanche has seen traditional finance players sign up to test out their evergreen subnets, which is their institutional play for blockchain. This includes big institutional players like WisdomTree, T. Rowe Price, Wellington, and Cumberland. Now, these companies have joined up with Avalanche's subnet called Spruce in order to make trade execution and to make trade settlements even more efficient. They plan to use Spruce as something of a test net environment for different financial applications and assets they might want to bring out. I mean, this is like the start of big things for crypto, right? Avalanche's Evergreen subnet, they were actually launched at the beginning of the month, thus offering a big suite of different blockchain solutions for institutions to be able to come in and use. And of course, institutional interest is only growing in the blockchain space. Evergreen subnets are EVM-based chains with permissioned validator sets and a custom gas token to be able to power transactions. AVAX, man, love it, love my AVAX bag. Have a big bag of AVAX, of course, from back in the day. You can always, of course, see my disclosure statement down below in the description. Holding that big bag for now, but I did enter a good sized position at 18 bucks just last week, aiming for a sale at 30 bucks on that big bag. Now, before I break down the Bitcoin news for you, a quick reminder, if you are a trader, then you need to get yourself an account over on BYBIT. It is the place to be for traders. Awesome futures markets, vibrant and exotic spot altcoin markets, wildly popular copy trading services, up to 30,000 freaking bucks in deposit bonuses, and even a $1,500 cash giveaway for depositing $100 or more and making a trade by the end of the month. You can get all of that just by using the link down below in the description to start your account. Thank you for using that link if you do. So let's look at the charts. The weekly close for Bitcoin came in pretty damn solidly above the key line of price resistance at $28,500. So that's very good to see. We did rally as high as $31,000 last week. And look, ideally, we want to see this week's candle also close above that orange line on the chart. Remember, that was a key area of price resistance. Took a long time to get above it. Let's stay above it. By the way, if the candle were to close looking something kind of like it does right now, that would actually be a pretty bullish signal because it would show a retest of that orange line. So basically seeing what was once resistance flipping into now support. Now looking at the relative strength index for Bitcoin on the weekly, we can see that 2023 has been a pretty damn dramatic year for Bitcoin. If we look just at the RSI, right? We're already nearing overbought levels. It went fast. In fact, last time the RSI was this high for Bitcoin was when Bitcoin was worth $69,000 freaking dollars in late 2021. That's pretty interesting, right? Although do keep in mind that major rallies tend to finish with actually an overbought reading on the weekly of usually around 80 or 90, such as we saw in 2017, 2019, and 2021. Right now we have around a 70 reading, so fuel left in the tank, basically, if we're considering the RSI. Now let's talk about Bitcoin dominance. This has been a big topic recently. Bitcoin currently makes up 47% of the entire cryptocurrency market cap, but it was actually rejected pretty strongly last week after reaching a major area of resistance at 49%. Now this could potentially be signaling a short-term cool down in Bitcoin as altcoins prepare to rally even more. That doesn't necessarily mean that the price of Bitcoin is going to drop significantly, but it could cool off after that big rally in the last few weeks, maybe giving altcoins some space to really breathe and expand a little bit. We're even getting some meme coins exploding right now. Something called Pepe did 1,000x in the last 4 days. WTF, man, this crazy stuff. Also, check this out. This chart shows that more than half of the total supply of Bitcoin has not moved in more than 2 years. That's pretty crazy. I mean, how do you even begin to wrap your head around the craziness of that? There are some serious diamond-handed mofos out there. This asset class is insane because of the people who believe in it. When you really understand Bitcoin, it's not so much that you're buying Bitcoin, right? You're actually exiting fiat, and that makes it easier to hold. Now let's discuss this idea: the biggest bull cycle for Bitcoin may be upon us. Well, those are the words of Bernstein, which is a private wealth management fund for high net worth individuals, you know, kind of people who have lots of money and probably lots of Bitcoin. To boil down their argument, basically they say the collapse of FTX was a bullish catalyst for the market overall. It was the final rinse out of toxic leverage that had accumulated over the entire bull run. Then in 2023, we got a bunch of macro catalysts starting to come in. We saw US banking weakness, being one of the key reasons that they cite for a strong cryptocurrency rally, as well as mentioning that any more banking dysfunction could actually position Bitcoin perfectly to work as, well, a safe haven asset right alongside gold. We have seen an increased correlation between Bitcoin and gold this year. They also cite the Ethereum Shanghai upgrade as another massive catalyst, and even the launch of things like Arbitrum, the layer 2 network for Ethereum. Basically, loads of positive factors lining up for crypto and lots of dysfunction in the traditional markets that can actually serve as extra fuel for the crypto markets. And most importantly, they believe that this will be the first big crypto bull cycle, which will see massive participation from leading institutional players. Yeah, we saw some dabbling last bull market. We definitely did. But we're already starting to see the big boys getting in, right? BlackRock, remember they're offering a Bitcoin fund now. Crazy stuff. Make sure to leave a thumbs up on this video if you agree and think that this could actually be the biggest bull cycle for Bitcoin. Do you agree with what Bernstein's saying? Smash the thumbs up and let me know if you do. Okay, that's it. Subscribe now. I'll see you next time.